start with, this is one clarification that we need, that you started with a fund for 250 million. You could only manage 122. That's the information we have. Would you like to clarify on that?
See, it's actually 250 because the corpus itself was half of that, about 120 odd, and then there was co-investment which was an equal amount. So if you add the two, the funds that were available for deployment were in the range of 250 million. So that's the size of the first fund.
You also spoke about how the residential part of private equity fire capital has, gone forward in terms of Astrum Homes, and you're saying that you're going to raise capital for the commercial, hospitality and retail sector. What is the plan on that?
What we thought we would do after we established the fire capital platform, which is a very activist platform, unlike other private equity funds, we are not a passive allocator of capital. We actually are 50% or more equity holding positions in each of our deals, and we come in right from the concept through to actual execution. So we have a role to play beyond just providing the funds. So having said that and having built that track record, what we wanted to do was across different elements, and all of these, the projects that we did in fire were all large integrated townships, 100 acres or more. So they had elements of hospitality, they had elements of commercial. While the mainstay was residential, we had all these other verticals that we've been kind of developing under the Fire Capital brand. So round two, we said let's focus on these different verticals, and obviously since our prime focus is residential, we started with the residential and set up Astrum Homes, which again is a carry forward of the Fire Capital legacy. This year, going forward, looking at other verticals, we're focused on commercial. So 2014-15 is when we'll look at that. And then, like you mentioned, there's a lot of opportunity in retail and hospitality. Maybe not just now, but as we expand the Fire Capital footprint, we would be looking at ventures in those verticals, whether it is going to be another private equity fund or permanent capital in a development company format or a real estate investment trust. That we will see as we kind of get into the details of each of these.
So there is nothing final as such in terms of raising money?
No, we are not out. We are not out trying to raise money at this point.
So what's holding Fire Capital back in that sense?
The way we've looked at the opportunity is also, going back when we started, we were very focused at that time. It was 2005, 6, 2007. If you were investing money, there were a lot of opportunities which were equally interesting, and a lot of funds went across different aspects of real estate, different verticals within real estate, focused on all of them invested. We said we will just limit ourselves to residential and the integrated township format at that point. So philosophically, we like to kind of dig our heels in, do what we're doing right, and then build on that gradually, because we think the opportunity is a long-term opportunity. It's not that it's a short window of a few years where you just need to just go bang 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 at everything that comes your way. So also what happened was, when private equity opened up, the Indian real estate space is not known for a lot of professional, because it's not known. If you look at biotech, you look at software, there's a lot that you can talk about and say these are the things that are done right, etc., etc. And from a private equity standpoint, it's easy to put money to work, but
so
the real estate space is not the same.
So what I understand is that as of now you are acting more in the residential space compared to commercial and retail. But if, for example, if you raise fund in future for commercial retail, what would be the size and what kind of investors you would be looking at?
See, we think that there's been a reasonably long period where commercial markets have been in a slowdown, so to speak. So to the second half of 2014, as the economy picks up, I think around the time that we have a new government in place, if they come in with a decisive mandate, I think there's going to be a lot
So
that
a
will
lot
happen
depends
on that. What kind of growth we see in the economy, and then as a result of that, there'll be a huge impact on which way the winds blow in the real estate space. So we are being little watchful in terms of waiting and seeing.
So you talk to a lot of investors like overseas. So what is the general mood of investors about real estate?
So the first round, which the fund raising period in 2000 and starting 2005, going through 2007-8 was good. There was a lot of money, 18-20 billion that was raised and put to work. But a lot of that was people betting on the future, saying
Okay.
big economy, opening up, huge real estate sector, not known for large professional companies, but equally therefore there was this opportunity for people to do good work and establish a name. So a lot of money came in backing companies at the entity level. There were also a lot of investments made at the project level. So people were also experimenting in a way, because this was being done for the first time. Real estate, private equity, earlier we didn't have private equity in real estate, we didn't have any foreign investments in, so all of these things were happening for the first time. Now is the time when people are pulling out their report cards to see how have different funds performed. LPs are also looking at what their experience, because a lot of large investors invested with different general partners in different formats. So they're looking at how they have performed, and as you know, not a lot of money has gone back out. So while a lot of money came in, it's still in the
Exits
process.
are not happening.
They didn't happen at least to the extent that they were supposed to happen.
Yeah.
The expectations were set really high, when the money was raised. And a lot of sophisticated investors also understood that, since they were doing this for the first time, that the results might not be great, but they equally understand that it's a long-term opportunity. So it was important for a lot of them to get in early, and they were prepared to not make the kind of returns that were promised to them. So they understand.
How has been the performance of your investment for?
See, we have so far, like I said, the last 3 or 4 years hasn't been great for real estate as a whole, but more so for commercial and retail. There was a lot of supply that came into the market,
yeah.
and then as the economy started slowing down, and the IT sector was in fact the flag bearer of the growth that we were seeing in the commercial space. And when they started slowing down and their offtake reduced, there was a lot that was expected in terms of FDI in retail, and because of that there were a lot of investments made in the organized retail, the mall space. So there was that didn't take off. So there's a lot of oversupply there. We had a huge amount of inventory that's still lying vacant. In the retail space, there's a lot that never took off in terms of development that were kind of put in the works, and then a lot of them tried to move into commercial and into residential. So there was a lot of switching that also
So
took place.
have you made like exits out of any of these projects? that
No,
you-
so all of our projects we have. What we did was, we did not make big ticket investments, in a structured format, or did not make investments predicated on a public exit. It wasn't like one big exit. In Bangalore, for example, we have 2,500 liquidity events. It's a 200 plus acre township with about 2,400 villas on it. So every time you build and sell a villa, and you
So it's
get
more
money out
phased manner.
in a phased manner, and through the profits of the
It's
development
not that
companies.
you invest in a particular project and after a point of time you exit like totally or possibly.
Yeah, somebody buys us out, or the partner
So
buys
how do
us
you
back.
give money back to the LPs, investors?
So it's
what kind
through
of money have you made and what kind of money have you given back?
it's through the profits that we make every year.
Mhm.
So it's a combination of buyback of equity and dividends that you give. So it's all profit linked. So you
for
make
example,
profits and you
like
take the profits
first round
back.
that you raised 250 million,
Mhm.
as you were saying. So what is the kind of money that you made on this, the return that you made on this? So
See,
if you give a multiplier.
we have we expect across the entire portfolio to make more than a 3x multiple.
3x.
And like I said, it's getting paid back over time. So different projects are in different stages of development. Some of them are far ahead of the others in terms of the amount of space that has been developed, sold, and therefore the profit realization.
Okay, so the kind of investors that put in money in fire capital for the residential in the integrated townships, can you take us through the profile of those investors?
See, we have a whole range of people, which it's a rather eclectic mix. We've got very high-profile private equity fund managers, very senior investment bankers, hedge fund managers who have invested money in their personal capacity. So we have a lot of individual investors, high-ticket individual investors as our LPs. No, everything's offshore. In fact, all our investors are from the United States.
Okay.
So we have some concentration in terms of our LPs. But so there are a lot of these high net worth individuals, equally very large institutions. One of the largest fund managers, more than 100 billion under management. We have some hedge funds, again very prominent names, order of magnitude of funds under management would be the same. We have private equity funds who had the mandate to invest in other private equity funds. So we've got some of that. So it's a wide range from high net worth individuals to very, very large investment groups.
Okay, can you also take us through the projects that you have under Astrum Homes and the projects that are lined up, that you're planning to launch in your future?
Okay. Unlike fire, where we had these very large integrated townships, 100 acres or more, Astrum is focused more on smaller projects. When I say smaller, they still need to be FDI compliant because we're an FDI company. So we have the requirement of at least 5.5 lakh square feet in each venture. But having said that, most of our projects are at least 1 million square feet or more. So our sweet spot is 1 million square feet. Some projects are as much as 2.5-3 million square feet. Most of our projects are about 1 million, which would be 500 to 700 homes, with their support infrastructure.
Okay.
So that's the typical format.
And you also told me that you're coming up with some projects in NCR.
Correct.
3 projects that are lined up.
So in Astrum, our focus is 2 geographies. One, we have a large presence in Bangalore. So in and around Bangalore, where we have some ventures lined up in Bangalore. There's one investment that we've made in Mysore, which again is about 1 million square feet. But our prime focus, being headquartered in Gurgaon, is the north, and in the north, largely the National Capital Region. We are looking at cities like Lucknow and others in North India, but primarily it is going to be the National Capital Region. We had one project which we launched 2 years ago. That was our first project in Panipat, which has done reasonably well. And now we've made another investment in a venture in Faridabad. That's again about 1,300 acres. We have 3 more in the pipeline, and these would be cities again, since we haven't made those announcements, but be in and around
So what are the
Gurgaon.
places that you would aim for example, if you
See, we think,
Gurgaon, Noida, or
yeah, we think,
Noida,
we
New
think,
Gurgaon?
yeah, we think Gurgaon, New Gurgaon has a lot of potential. So that's something that we are interested in. But again, on the Bhiwadi-Nimrana axis, there is a lot of potential. Noida, Greater Noida, again, right up to Yamuna Expressway. But interestingly, with the way urban infrastructure is playing out in the National Capital Region, primarily the metro, we think opportunities in areas like Bahadurgarh, etc., are also beginning to look attractive. On this side, Faridabad, we think is going to be a big development area after Gurgaon, Noida, Greater Noida. I think time has now come that Faridabad is going to catch up.
The 3 projects that you're planning, what would be the nature of those projects?
Primarily all residential. They will have support of some commercial retail elements, but primarily residential. 2 of them are going to be high-rise, on about 10 acres of land. The typical group housing format that you see in Gurgaon. But what we are also looking at are some mid-rise, it's a mix of some low-rise, some mid-rise over a larger area. So those would not just be the typical 10-12 acre projects, but when I talk about areas like Bhiwadi, Nimrana, we're looking at some options which are more low density and low rise.
So what would be the source of fund for these projects? How are you going to go about that?
See, we have committed capital in Astrum. So the first round was about 100 million, and then as we need more capital, we'll just keep drawing more capital. So in Astrum, we have an annual plan, and so this year we have about 8 to 10 projects which would take anywhere between 50 to 100 million US dollars, which we will draw as we generate the investment opportunities come our way, and we'll
So,
probably.
you started with small towns, tier 2 and tier 3 cities, and the logic and the rationale behind that was that these are the areas which had a lot of potential, and also you wanted to create a different kind of township. But now you're moving with these 3 projects where you're moving to the main cities, so to speak, the center of all the activities and everything. What has led to this change in strategy?
See, what we realized was that if you're doing the large format, you're in it for the long run. So if you're in Nagpur doing 150 acres, then by Nagpur standards, that's a huge development. So in a sense, it's about 5 or 6 projects all put into one, which would keep you busy for 7 to 10 years. So there were economies of scale there, and that allowed us to go into different geographies. And we also had a local partner in each venture. In Astrum, we don't have that, neither do we go in for the very large format, nor do we have local partners. We do joint developments where we just take the land and we act as the developer and come in with the funding. So we're looking for creating, and it's all one brand. It's not multiple brands like we had in Astrum, in Fire with different projects. So it's one brand, and we're looking at creating brand salience in a particular geography and then moving out all over the country. So that's the reason why we're focused, since we're headquartered here, and with the extent, the pace at which the National Capital Region is growing, we see a lot of potential here.
I'm sure you have some unutilized fund from that you're going to channel into into the
So
new
one, there is
projects?
unutilized funds, and two, whatever you have invested, you also start recouping that and making returns on that. So in fire, whatever profits we are making, because that's a fund structure, we're sending it all out. But here we have the ability to reinvest that. So it's both existing unutilized funds as well as whatever returns are getting generated are getting invested again. And on top of that, there is, we know that once we need more capital beyond what we have already, existing investors as well as additional investors who are keen to invest would come in. So that's how we'll keep.
And you also ventured into holiday destination with your project Clouds End. So are there more projects in the pipeline?
Yeah, we are, that's a project in Kufri under Astrum. So yes, there are, we are looking, well, that's not mainline for us, but we are also looking at, such niche.
Like in the pipeline, you have 3 new projects in NCR. This is the one, that's like a different thing.
Yeah, it's a
Are there
different.
more projects on those lines?
Not, like I said, this isn't part of our core strategy. But off and on, you hit upon something which really excites you. So this, because of the location, great natural beauty, one of the highest points in Kufri, near Shimla. So you tend to do a few of these to add to your portfolio.
Yeah, and the last question, which will be about the strategy of your company, is that you've always invested, starting from fire capital, and most of the projects that you've invested in, they have been in small towns, tier 2 and tier 3 cities. How has that strategy worked for you?
See, the strategy, the reason we focused on tier 2, we've done tier 1 also, projects on the outskirts of tier 1. The strategy was to focus more on the real demand, look at middle income segments, give them a different lifestyle. So do something to kind of raise the bar of real estate development in that particular market, create a differentiation, give people a different lifestyle. So that's worked well. So we've gained a lot out of that. We've won awards at project in Indore, which is our first project and therefore most advanced in terms of the size of the community living there, etc. Won the best township award last year, the NDTV awards, and then was also awarded by CNBC. So there's a lot that has worked very well.
But what were the
learnings?
Because we see a shift in your strategy.
The learnings from fire capital have been that you need to focus on real demand, only then will you be successful. So even if you have shifted geographies and said we are now going to be more in the national capital region, that philosophy will continue to be core as far as our strategy is concerned, and that's what we've looked at. In terms of other learnings, so far in fire we've done like very large townships, 100+ acres, where you are creating, so it's like a complete, within the walls of the community, everything is there. Now that is not possible to recreate everywhere. Getting that much land now is such a big challenge. So you have to focus your attention on smaller projects. So that's also another reason. So there are a bunch of reasons what making us move away from these large formats in tier 2 and outskirts of the tier 1 cities to the NCR more, it's a more concentrated strategy in terms of focus on a geography. So it has its benefits there in terms, and it's all a single brand. So earlier we had different brands as part of the fire capital strategy. Here it's one brand, Astrum.
I think that's about it. It was really nice talking to you. Thank you so much for